Everybody, this is Jim at SP500chart.com. It's about 5:20 on June 23rd, 2014. We're going to take a look at the S&P chart like we do it after every day's close. Really not much going on today, but I'm going to do it anyway. After I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Basically, we're looking at a day where the markets were flat. I mean, we traded down just a little bit, closed very close to even, and in the grand scheme of things, obviously, the significant thing is we are now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days over 1900. So that's no fluke. And I didn't think it was. The only real thing that we have of outstanding business, if you will, is we've got a target of about 1990. Now, I mentioned over the weekend that there is a possibility that you could look at this, what I've been calling an inverted head and shoulders pattern. There is a possibility that you could slightly alter what this is by saying, okay, it's because we don't have a full touch over here for that left shoulder, then maybe we're dealing with a diamond pattern instead. And what that does is this. Keep in mind where this neckline right here is. If this is a diamond pattern, then the diamond would be defined potentially, it doesn't line up perfectly, but probably like this. And if that's the case, then you can see that the measurement of the depth of the pattern is slightly less than what we measure as a full-blown inverted head and shoulders pattern. And it's important to note that because this line is sloping down a little bit, that our target is not only a little shorter in measurement, but it's also a little shorter in where it projects to. So if this is a diamond here, then actually we have a target that's more like 1968. You know, I'm not really, and I remind you that is also a minimum target. I'm just not convinced that it's a diamond. So I'm keeping this as an inverted head and shoulders pattern. I think we've got room to at least get up to 1980 before we start to run into some significant resistance. And if we decide to do this in rather lazy fashion, we could make 1990 in about 14 days, and there we are. And we have not had to overcome any resistance lines. We just take a little bit less of an aggressive path for the next little bit more than 2.5 weeks, and there we are at 1990. So really, I went over some of that in the weekly review. But basically today, we had this little narrow trading range right here that we looked at yesterday, and it really was not clear if this was going to be a continuation pattern or if it was going to break down. And to be honest with you, it's not even totally clear if that's the whole thing. it could be that what we saw on last Friday ends up being just part of something that's a little bit larger and a little bit more. Let's just say it's something a little bit larger. I think that's the perfect term. So you can see that we ducked underneath this line, back tested it, ducked down again, but we actually closed by an eyelash or so back inside of these two lines. You know, this is a very small thing. I'll say this. I think we can look upon this line here as being resistance. I think that's that's fairly evident, but not strong resistance by any stretch, because when we tag this today, the S&P sold off by how much? About 0.2%. I mean, nothing. So this is just, this is only on the chart because it is there. You think of it as maybe a curiosity. We'll see. We'll see. The important lines right now, I think, are this rising line right here, because you can see we've got a pretty decent history. Again, this is short term, but I think it's certainly worth keeping an eye on. If this breaks, then we could come back down to retest 1950, and if that gives way, then we could be headed for the 1930s or 1940s, depending upon when this might take place. So for right now, I don't see anything in this chart that worries me. I don't see anything that says that 1990 thing. I don't know. No, 1990. It's out there. It may or it may not happen, but we've seen these things come to fruition so many times over the past 5+ years. I think I'd be crazy to expect that that this is going to be the one that fails. It could be, but since so many of them have completed, I'm saying this one's going to complete too. What would it take to change my mind? Well, you know, frankly, for me to give up on that inverted head and shoulders pattern, it would take setting a low at some point underneath 1925. As long as we stay north of 1925, then I think, you know, that would be a higher low. But if we set a lower low than right here, then I think you might have to say, well, now I'm starting to get a little bit concerned about that 1990 target. But so far, nothing to make me that concerned or even the least bit concerned. I'll remind you that we have these two turquoise lines on the chart. These are based upon that inverted head and shoulders interpretation, and these lines right here, according to one of the authors of Edwards and McGee's Technical Analysis of Stock Trends, whichever one of these lines were to get tagged should represent a buy. Okay, a buying opportunity. We came close to this one back the week before last, but did not get it, did not touch it. So in retrospect, we could look at this and say, well, you know, the buying opportunity was about 5 points higher than where the textbook says to expect it. But anyway, guys, there's your video. Like I said, not much happened today, but I want to do the video for you anyway. And I also want to thank you for watching this and for your kind support with your subscription to SP500chart.com. Now, let me say this. If you are looking at this video and it is not June 23rd, but rather it is June 29th, or the 30th, then for a very reasonable fee, you could have been looking at this after the close on Monday and not sometime over the following weekend. So just think about that. Go to SP500chart.com, check it out. Thanks again. Take care.